welcome to Trading Lounge and the gold report for the Friday, August 20. And I want to start with silver today. So with wave A here, an A and a B and a C wave for the wave B, and 1 and 2 and 3 and 4 and 5 here for wave C of 4. It is possible that we can have more downside here because this move down through here, even though it was a bit like a capitulation sort of move here, it sort of reminds me of wave 3 here. So it's possible to have, at the end of the day, it's possible to have something like wave 1 in here and wave 2 sitting here, and then this becomes 1, 2, 3, 4 and 5 here for the wave 3, then 4 and then 5. So it's possible for it to come down further. So I just want to have a look at the intraday here. Well, the tick chart always does well. Let's just check on this to see. I haven't really sort of updated this a bit, but yeah, I remember counting down here we had 1 and 2 and 1 and 2, 3, 4, 5 and down. So I was looking at this as being wave 4 to come back, but just to help sort of confirm that, I just wanted to get enough time in here for this. So well, if that's going to be a wave 4, then we need to bring that over there, and I'll need to lift that up a degree of structure as well. But this here is in 3 waves, whichever way you want to count it. So an A and a B and a C. This one here is 1 and 2 and 3 and 4 and 5. So this can be bullish as long as that low stays in. Okay, so this could be up for wave 1 here, an A wave, a B wave and a C wave for here. But if that low is breached, you can clearly see that there's 5 waves here. So if that's breached there, then it's highly likely we're going into something else, and it's likely that we can come down here further at that point. Okay, and this may even push up here further as wave 1 here and ABC for wave 2 and then move down. So we'll just keep an eye on that, okay? But yeah, those 5 waves there have given us a nice definition of where we can be with this. And if we see like 1 and 2 and 3 and 4 and 5 up here, we get 5 waves up here, then we can start looking to be bullish at that point. But even if we do get 5 waves up here, 3, 4 and 5 up here, we don't have to panic to buy or anything, because there will be some sort of ABC coming back here again for that. I can't put too many things on the chart here now. I'm at my max, so I'll just clean this up there. But anyway, you get the idea for silver in that regard. And let's check on on gold. So with gold here, we've got, this is a weekly chart for gold. You can always look at the code and the date up here. And we're looking at this in 2 ways. We're looking at it as an irregular flat, as an A and a B and a C wave here. And then that way we just go straight up from that point. But we do need to confirm 5 waves up here. So we'll be looking at that today. Secondly, we could look at all of this here as a descending triangle. So an A, B, C, D and E here for this, and having wave 4 over there, so I better put that over there a little bit. So yeah, we've got those 2 particular counts going on here. So you know, we can count down here. You could count this down as 1 and 2 in here, and 3 and 4 and 5 here to get that wave C here. Either way, the thing here is that this box here from that high to low here, that's the 61.8%. So if it's going to fail, that's where it's going to fail from. So we need to see if we're going to get 5 waves up here, because if we get 5 waves up to the 61.8%, then we know we're bullish at that point. Otherwise, we have to work this triangle pattern that we're in here with at the moment, which will be 3 waves up here. So we still got a bit to work on that. We still don't have this structure down here yet either for that. So yeah, so let's let me think for a moment here. So if we look at wave C here of 4, I think that was on the 4-hour chart. Yeah, okay, so we'll just go over this. I mean, doesn't hurt to look at other counts and, you know, understand when they're wrong and right. So 1 and 2 and 3 down to here, and an A and a B and a C for 4. There's a big relationship between 4 and 2 here, but yeah, I'll leave it at that. My comment is so wave 5 down here, and the wave 5 here is really quite long compared to wave 1, but the thing with commodities is that you normally get the extension in wave 5, not normally, but often. So the thing here is that so far here, we'd counted on the tick chart, we confirmed 5 waves moving up here, and then we're looking for our ABC correction, and then on our tick chart we confirmed 5 waves up here, and yeah, so we're looking for this particular count, we're looking for wave 4 here, so that line across here is 38.2% retracement level, so it could still drop at that point. There is a good case that it can be sitting on that low right here, and we'll look at that on the tick chart, but it can also move back here as well for that. So back at the 1772 is my favorite number in that little area. So that's all part of group 2, but I won't go there now. But the takeaway here is that for this to be bullish, we need to see 1 and 2 and 3 and 4 and 5 here. So we need to see those 5 waves. So it looks like we'd get a classic trading levels pattern across here, and that means we'd go long over here for that. So the classic trading levels pattern on the long side looks like this. So we've got the arrival, the reaction. We're looking for this wave 3 here, wave 4 here, wave 5 here, and ABC that could pull back a bit further here, and then going long over here. Now, sure, if we do get the 5th wave up here, then we can look to buy back in the A, the B, or the C, the end of the C wave, in the 5th of the C, or the beginning of this move here, gathering little evidence and confirmations and trade setups at this point, getting some positions in here, and then building back over here for that. So we'd need all this to unfold first. So the arrival, the reaction, the first high above the level, the ABC correction. So just looking at that pattern here, we've got 1, 2, 3, the arrival, the reaction, the first high above the level, the ABC pattern for wave 2, and then start to build in over here once we're, you know, once we feel a bit confident and we've got enough evidence and yada, yada, yada. So that may occur or it may not. So it's not a matter of me being right or wrong. It's like, if we get 5 waves there, well, then we can look at that. Then we can be assured, because I don't know if we're going to get 5 waves here. This could also just be an A wave, a B wave, and a C wave here for the A wave, and coming back for the B wave, and going up for the C wave here. So this is the 38.2% retracement level. So if we were looking at it, I'll just use this chart because it's quite good, really. A bit of space on it rather, nice and clean. Or I don't know if I can put objects on here. So it could be an AB, would have to pull back down below the 38.2% to be a B wave. So the B wave is normally 50 or 60%. So we'd want to see a clear breach of that to be the B wave. And then there would be the C wave here. If it lets me put it in, okay, that's good. And then there would be the D wave here for the triangle. That's a rather small D wave, but I'll just run with that, and I'll just give it a bit of definition. 15 is probably a nicer look. So yeah, so they're the thing. That's basically the gist of it all, really. I don't know what we're going to get. We have to wait until it's delivered, and then we can work from that. If we do get this as the, if we have to look at this as the ABC for the A wave, and then we'll look for 3 waves back to the 50-60% from here to here for the B wave, and then the C wave. Then we'll be going down for another A, B, C here for the D wave at that point. So we'll look at that now in terms of get the right chart up here, a bit like this here. So the A wave here, the B wave here, and the C wave here for the D wave, and then the A, the B, and the C here. You with me on that? So I'm a bit I know it's going to, the platform's going to give me a bit of a wobbly, but I can use this one, these ones here. So it'll be something like this. So that's the other formation that it can take. So yeah, I don't know which is right and which is wrong, you know. We just have to see. But we'll take a closer look at this here, just for the the interest of it all. Okay. Just removing a few objects on the chart so I can, I don't really even need those. Okay, so first of all, I'm sort of running two counts here, so you just got to bear with me a little bit to understand them. So from the beginning here, we can look at it as wave 1 and 2 and 3 up here, blue wave 3 and blue wave 4 here and blue wave 5 for wave 1, and then we would come back for an ABC wave 2 and then we'll go up for wave 3. Okay, the other one here is that we would look at this as the, well, a smaller A. So I might just do a few things here. I'll leave those. I'll get rid of that. I need more space. Okay, I can get rid of these. And that line there, get rid of these. That gives me a little bit more to play with, which is good. So I'd have to move this over here somewhere, because we're on a tick chart. It's going to churn that time up there, and that would be wave C, B and A over there. But this could be the A, the B and the C for wave D here. That could be the case, or we've got to look at all of this as wave A up here, and as I just mentioned, wave B over here. So this little area through here, that's the 38.2% retracement level, that line through there where that wave 4 is. So for this to be a wave B here, it needs to drop through that 1765. It needs to drop through group 2. So 65, 72 and 80 here are all part of minor group 2, subgroup 2 rather, because 18 is a minor level, and these are the next degree of structure down to the downside. So wave 4 here could pull back to, let's open this up a little bit and just have a look at this. So we've got wave 5, oopsie daisy, wave 5 of 3 here, because we'd been counting up here as all of that. So we've got all of that there. And then we were looking for wave 4. There's a good chance that we could have this as the A wave here, then an A and a B and a C wave here. Not a very good C wave, I have to say. I know you can throw things at me for that. And wave 4 here. But we can count 5 waves up here, but we could also look at this as an A wave here, an A and a B wave here with an A, B, C here for the B wave and a C wave up here, and come down here further. But because we can count that as 5 waves up there, it can be wave C or it can be wave 1. If it's wave 1, that will be an A, B, C. If that wave 4 is right and it's in place, this will be wave 1 here with an A, B, C for wave 2. And then we need to build a case up here. So far up here, we've only got 3 waves up. So this morning when I did the Australian video, we just had this 1 and 2, and we'll look for this 2 here and a push up there. So now I'm thinking, okay, let's just expand that up a little bit. We don't have 5 waves up here yet, as 1 and 2 and 3 and 4 and 5. So we'll see if we get that 5th wave there for that. If we do get 5 waves there, well then that's a good chance that we're going to get a 3 wave back and we'll head higher at that point. But either way, from this high to this current low here, we'll need to be mindful of this 50-60% retracement level. If we get 5 waves to it, then that's going to be fantastic. But we could just fail from here, because all of this could be part of a move down further from this. So I don't really know at this stage. So let's just see how we go with this. I mean, it's a bit complicated, this correction. There's different ways to see it. It looks good as a wave 4, but because it's complicated, it can also be the wave B as well. So the wave B would need to drop through the 38.2% retracement level. So let's just see if it goes that way or this way. Either way, it doesn't matter, but it would be nice to make our lives simple and have this as the wave 4 here, and then have 1, 2, 3, 4, 5 up here for wave 1, wave 5 of wave 1 here for this here, right? That would be nice to have all that there, because then we can just focus on the A, the B, and the C wave here for wave 2 at that point. Can we squeeze wave 2 in there without being... Yeah. So then if we get that wave 2, that means we can start to look to go long from that point. That's the setup that we want. We want that 3-wave move back here. So we just really have to wait to see what we get here, to see if we get, squash this back up, if we get 1, 2, 3, 4 here or 4 here and go up for 5 here. If we get those 5 waves up, then we're going to get an ABC and we're going to go up further. If it drops through the wave 4 here, then we're going to be in the B wave and we're still in the triangle at that point, and we're going to be here till Christmas, you know, well, so to speak. Yeah, so that's it really. Have a look at this is the 10-year yields here. So probably on Monday I'll be putting the yield and the dollar in the S&P video, and the S&P video I'll take the stocks that I do out of them and create another video for those sort of, I'll just call them FANG stocks for the time being. It doesn't have Netflix in it, but I don't know if I even want to put that in there. So yeah, so anyway, that a bit will change on Monday. So anyway, the yields here, we're looking for an A and a B and a C wave here for the wave 4, and then a move down through here. So this is on the daily chart. I won't go in the intraday. So we've got 5 waves down here. So we're looking for a rally. We may get a bit more of a rally to come in before we get a drop, but we're looking for 5 waves down here to the 1 area here. That's all locked, so I've got to move that there. That will be about there somewhere, and that would make wave C. I've got to be careful at wave C here because it could also be wave 3 at that point as well, but I'm putting wave B here for the time being. So it's just something else that we've got to work through, but it's quite clear that this this move down here was a B wave, so it makes this an A and a B and a C quite nicely, and we do have a very clear wave 1 down here, so I'm just a bit unsure about the wave 2. So we're on the right track for the yields to head lower for a bounce at 1 here, and the US dollar still got higher to go. So with the US dollar index here, and I can see this because we've been looking at the Australian dollar and lining the Australian dollar up and the DXY up against iron ore, copper, and so on, which we have been doing on the Australian video. So if that interests you, I know with the Australian dollar we still got higher to go. So this is our box here. So this is where we need to be in the box basically. So I'm not quite sure. We're looking at this as 1 and 2 in here and 3 and 4 and going up for 5, but it may be that this is 1 and 2 here and 3 and 4 and 5 as well. So yeah, it's not finished yet, but yeah, I feel like we're on the right track because the commodities and the other currencies are on the flip side of this, and yeah, so alrighty, I'll leave it at that. Thanks for tuning in. Cheers. I just want to have a look at sorry, just wanted to have a look at GDX here. So with GDX, so basically resource stocks are falling out of bed, even though it's a gold stock. So gold's going up and stock is, going down. Gold stocks are going down because they're being pulled around by the general market because they're part of that as well. So GDX is an A wave here, a B wave here, and a C wave down here. So 1 and 2 here going into the 3rd wave, 4th and 5th. So yeah, that will probably, if we're in a triangle pattern with gold, then they'll probably finish around the same time if that triangle pattern has got any relationship with this GDX. Because I mean, GDX is really, ABX and the other stocks, in all of that. So alrighty, I'll leave it at that. Thanks for tuning in and enjoy the weekend. Cheers.